All right, another mentorship lecture. This is just my journal. This is my personal journal, my personal annotations, my personal things. I'm just putting out this here to document my journal, me going along with the mentorship, and yeah, I just appreciate ICT's time. This was his birthday today, and he sat down and gave us a lecture, and I appreciate him coming back on here and doing a 2024 mentorship because I wasn't there for the 2023 mentorship. So I've been taking this stuff to heart, kind of. I've been rewatching these lectures and have been taking notes, and I appreciate that. So my main takeaways from this lecture was relax while watching Price, 100%. Be a robot while watching Price, and just to not have emotional stimulus while watching Price. That's all I'm doing, observing and watching Price. Like being a robot. What is Price more likely to do at certain times of the day within certain PD rates, within certain elements? I don't really care about what Price does. I don't care. If I get it right, if I get it right, then that's cool. If I get it wrong, then that's cool as well. I have something to learn on and glean on into learn experience. I'm here to do this without trying to take any emotional damage, emotional heightening by other people, by trying to feel like I'm right, trying to feel like I'm better. That's not what I'm here to do. I'm not here to try to make myself feel better than I am. And I'm also not here to shit on myself. I'm not here to make myself feel worse than I am. I'm just observing and collecting data. That's all I'm doing. I'm a robot. I'm collecting data. And if there's something that concerns me, I will journal that. And I will go into my journal and I will go back throughout the day and see what type of things messed me up or not. I just started this little tape read thing. I mean, I barely did it because I was kind of watching the lecture. But I was like, I think that we were not likely in a cell model here. I just wrote that down, and then I went back over that when I back tested. So I'm gonna go over annotations as well. I got the 15-second chart, the 5-second chart, and the 1-second chart today, and oh boy, the 15-second chart does bring out a lot of detail that the 1-minute chart doesn't get. I mean, it's not really needed because like you can get chopped up with that, but I don't know. While I was kind of just tape reading for the PM session and just the rest of the day, makes a lot more sense, and I was definitely a good decision. I'm looking at time when the market's gonna start spooling, and these are just my main takeaways from it. At 7 a.m., where the clusters of new day opening gap, new week opening gap. Um, Other than that, I thought there was gonna be a lot. I thought I had a lot more like price related notes, but there was a lot of psychology, which is why I think would just be an observer. I'm just an observer of price. I'm here to collect data and journal, just collecting data and journaling. How long did it take? Did it fail? What sticks out to me? What do I do? I'm constantly doing drills. I like that analogies. Doing drills over and over, repeating doing drills just to measure where price is more likely to draw to. And then journaling and annotating any concerns within that drill. After the fact, I will then journal in hindsight and then log that as a positive experience. No matter what, always find that silver lining. It might be like some sugarcoating, but I really think that highlighting the positive things rather than going over the negative things. Like when I used to journal, I used to say what I did right, what I did wrong. But after in my experience, when I've journaled just positive things, your subconscious is going to retain those things rather than, oh, what did I do wrong? I mean, it's good to know the things that you did wrong, but then also come up with what you did right and then highlight that silver lining of what you can do better, and use that as ownership and take ownership over that and become and actually get better at that. Like, don't push it aside because this is when mistakes can happen. Like, this is when I can make mistakes. I can afford to make mistakes right now. Cool. I don't got to be there right now. I got to be someone that I'm not right now, and all that work ethic and yeah, nothing else crazy, but yeah, just some good notes throughout the lecture. I would definitely recommend watching it. He pretty much outlined where the market was going. Let's see. Okay. And I have some annotations that we're going to go over and then key talking points that he went over and that I outlined. And first of all, I want to go on the higher time level, such as the 15-minute. And I really do think that it's still interesting that that he's highlighting new week opening gaps and new day opening gaps when we're in this daily consolidation. I mean, it might be a coincidence, but I think that we're prone to consolidate here. And yesterday we had that 15-minute PDA rate, or that 15-minute fair value gap. 25% got respected. I think I have that annotation on my chart. Yeah, 25% of that got perfectly respected. I know I have a lot of annotations. For some reason I don't like deleting annotations because I don't know. You put work and effort into those annotations, and then like just seeing them delete. I don't know. It's just not the best. But overall, I kind of like doing these after the fact of the market. The market's still open. We have about 7 minutes. Let's see. We might. It was looking like overnight we're probably gonna trade up into these highs. That's probably my guess, but I don't really care to predict where price is going. As you see, end of day kind of we have this previous new week opening gap. I always use pretty much I refer to all the new week opening gaps. He's talking about only having five, um, 5 days new day opening gaps and 5 weeks of new week opening gaps, which I think is a general good rule. I mean, I like to see more than that personally, but like these gaps don't really mean too much if there's no narrative in play. So enough of that. Let's get straight into the chart. I don't know if let's use a 1 minute first. I don't know if I have any 1 minute annotations. So we had 8:30 news today, and like ICT was saying, we were in between. Well, we had these two cluster new day opening gaps. Where are we likely to draw? We just had a stop hunt here. We've displaced higher. We filled that imbalance there, and we have inefficiencies that we need to rebalance, and we also have a large trading range that we could possibly trade back into to rebalance these inefficiencies. As we end up doing, we have this 15-minute SIBI that he highlights, and we have this 15-minute inversion within that breaker. So like we were talking about yesterday, or I think it might have been the day before, anytime we have anytime we have a breaker, this 15-minute inversion level, my inversions I like to keep blue. That's going to be an important level of where we want to see the market draw into, and we pretty much use that as support here. We reclaim that along with this 15-minute imbalance, and then we're almost seeking these highs. We didn't quite take these highs. We didn't take them on ES either. I don't believe so. Let me check real quick. Yeah, we haven't taken those highs on ES either. We refer to this previous new week opening gap there. I think we could consolidate. Well, obviously you got to see bias going into tomorrow. And yeah, let's just drop down to the 15-second chart. I feel like that's most. I don't know. I'm gonna be using the lower time frames in my little reviews. But here we have 7, 8, and 9, 8:30. We had news, and then we just expanded. This was kind of crazy though. Like we did expand like 50 points in 1 second. We end up leaving a balanced price range here. Yeah, he goes over the logic behind this. We have a wick up and a wick down. That's a balanced price range. Notice how we respect constant encroachment. And here we have a volume imbalance. And notice how we don't even trade into the volume imbalance because we have there's a 5-second volume imbalance that gets referred to instead of this 15-second volume imbalance there. We end up reclaiming this buy side imbalance here. And if you look at his stream, or if you even map this out, 75% was where we respected 75% of that imbalance here. And then down close candles supporting price. And then we consolidate around new week opening gap, new day opening gap. If we talk about them long enough, like I'm gonna call like a new week opening gap, a new day opening gap, and vice versa. It's just gonna happen. And so here we have, I think these are 5-second annotations that we can drop down into, but we have this, or there it was the 1 minute. It was a 1 minute chart. It's the 1 minute chart. ICT was talking about real time. We have this 1 minute volume imbalance here. We trade into it. This is the order block here. Then we have this volume imbalance, and then we trade up into that 15-minute SIBI, and then here we end up respecting this again. We have a 1, 2, 3 drive. We end up having a market structure shift, 15-second imbalance. There's a 2022 model there, and then we end up trading right into this 1 minute news fair value gap right here. 1 minute news fair value gap, and we immediately create a balanced price range here. Fair value gap in, fair value gap out. We now have a breaker here that we reaccumulate within. This is a balanced price range. We don't trade within that. Then we end up seeking buy side here. And we end up seeking that 15-minute inversion as well as these equal highs here. And throughout the rest of the day, we have... So this line is like... I'm going to delete it. It was equal highs from yesterday. It was those highs right there. We end up generating highs. We have 1150 macro. We end up expanding from... And we'll highlight those when I drop down. And here we have, we come back down, we sweep this low, and then this is a 5-minute fair value gap low. I didn't highlight the high of it, I just highlighted the low. It's gonna make it. it doesn't make that much sense. But if you look at the 5-minute chart, this is a 5-minute fair value gap. This is a low of that, respected perfectly there, and then respected again here. We end up swooping this low SMT right there, and then we continue in a buy program, and pretty much throughout the rest of the day, we're kind of just consolidating. There isn't really much. We do have equal highs here. We put in equal highs, but we respect this imbalance, and then we trade lower into a 15-minute imbalance, I believe. Let me look at the 15-minute chart. Yeah, I did this 15-minute imbalance. I was looking for this to get traded to at least this high. The high ended up getting traded to, but we ended up coming lower into a previous, just outside of previous new day opening gap. That's 5-6 new day opening gap right there. And yeah, let's want to hop down in the 5-second chart to look at the pre-market, the 8:30, and then I'll hop into a 15-second chart. We had 8:30 unemployment data. So here's that volume imbalance I was talking about right here. So we come down, we respect this balance price range on the 15-second chart. And then we also have this volume imbalance here. We have that BISI that we're respecting. We're not drawing any lower for right now, so the draw could be higher for right now. Then we have this 5-second volume imbalance. We have generated highs here. We come back down. Order block. Order block gets respected right there. Constant encroachment of this fair value gap. And notice what was talked about with the fair value gap. Anytime that we have a fair value gap that doesn't get traded into constant encroachment, this down close candle is now an order block. We never trade into it though. Just something to highlight. And then order flow, volume imbalance here. We have a 5-second imbalance there, and then we trade up, consolidate. There's not really much there, and then we end up seeking buy side there. And let me hop to the. I never looked at this section on a 5-second. I don't think it's needed, honestly. It's just something that I'm gonna go over, just to be a freak with, you know. Pause. Just be a freak with. So we look at the 15-second chart. We have a 1, 2, 3 drive, and in a live stream, initially we do have this market structure shift here. So technically, if we're just looking at in terms of patterns, this is a 2022 model right here, but it doesn't work out. Because this is 9:30 right here. 9:30 just opened. So we know that there's likely going to be some form of Judas. And in here, we induce breakout traders. Then we come back up. We sweep this internal high here. And then we reprice this 15-minute imbalance there. Respecting this imbalance shows underlying weakness. Then we end up trading lower. We end up having an imbalance here. Now this is the real 2022 model. So say you're a straight pattern trader, you want to look for a 2022 model. This ends up getting disrespected. Well, we have another one right here. We end up trading up, and the wicks can trade as much to. He was talking about this. Wicks can trade as much to this volume imbalance here. That's what we end up trading to. The wick right there, just outside the lines of that. And then look at the bodies respecting this 15-second imbalance. And what's the draw on liquidity? Draw on liquidity right now is this 1-minute imbalance right here, the news fair value gap, as well as this new day opening gap here, and then also the new day opening gap there as well. This is beautiful price action, very algorithmic today, and also a good lecture. Good lecture that I would recommend listening to or watching. And here we have a stop on right here within this imbalance. He went over this institutional order flow entry drill. Then we leave equal lows here. We leave equal lows, then we come up, take a high. Volume balance gets created. We never create a fair value gap here. We have this inversion level that we fail to trade up into constant encroachment of. And then we break down, volume imbalance there, gets respected. And then not really much else in forms of entry, just another volume imbalance gets respected there. And then we end up seeking that news fair value gap. So right here, news fair value gap, and then we immediately displace out of that. We've left these equal highs there. This is now a balanced price range. So price doesn't really need to trade within here. We've had a fair value gap in, fair value gap out, balanced price range there. We have a BISI here that doesn't get traded into. I think I went over the 1 minute, or wasn't there a 1 minute breaker here? I believe. We'll say this is a mitigation here. Reclaiming that. We have volume balance, really gets traded into there. Displacement, imbalance right there. After consolidation, imbalance gets respected there. And then, I was highlighting the PD array as well. Down close candle, you have a fair value gap, doesn't trade a constant encroachment here, and then we end up having an order block, but it doesn't get traded into. I have a lot of annotations, and I don't like how I'm on the 15. Oh, same thing here. We have a down close candle, trades into a 1 minute fair value gap. These two now become an order block. Gets respected there. Keep on trading higher. We keep on trading higher. The draw on liquidity is this 15-minute inversion aspect. And then after that, new week opening gap if we want to go there. This blue box is a new week opening gap. And then this is the quartiles of that new week opening gap there that I've highlighted. And I forgot to even I'm on the lower time frame, so I forgot we have a 950 macro, and I forgot in my market review yesterday to highlight the macro that I literally mapped out. But here we have a 950 macro. We end up creating a 950 macro reversal right at 950. We end up reversing. 1050 macro, we kind of consolidate. There's not much here, and then I'd really say there's not a whole lot here in terms of entry, but just underlying order flow. Like here, we have an imbalance with this mitigation right there. It gets respected. Imbalance with order block here. It gets respected. Come back down, sweeping these lows, coming up. We fail to reach constant encroachment of this imbalance or the new week opening gap, and then we end up creating failure swings here. Low resistance liquidity, phantom trend line here. We come back down to that 15-minute inversion level, and then we end up having a sell side sweep here. Displacement leg, this is our breaker, 15-second breaker that we end up coming back down into perfectly here. Constant encroachment right there gets respected to the tick, where I think that's on wrong. Yeah, I think that's better. I'm choosing the whole body of that, the whole candle. 15-second breaker right there. And this here, this is the dealing range high to dealing range low. At around 50%, we end up consolidating. We end up having a stop on here, coming back down, repricing that breaker, and then we end up seeking buy-side liquidity there. 75%, we have our silver bullet. 25%, we have our low risk entry. And here, if we're just looking at pattern's sake, buy-side taken, shift to market structure, fair value gap right there. How many handles does this offer? If we're looking for that possible breaker, which is best case scenario. But I'll say just this imbalance right here, 27 handles right there. And then here we trade into the breaker, fair value gap in, fair value gap out. This now becomes a breaker here. This 15-second candle. It's not the cleanest, it's not the prettiest, but look at the bodies. Look at the bodies within that. Actually, would this be the? I'll just call it a mitigation. Look at the bodies right at that 50% DRT level, and then we end up displacing higher, imbalance right there. And then this is all occurring within what time? 1150 macro. 1150 macro starts at spooling higher. So macro delivered very nicely today. All the macros did pretty much. And here we have a 1250 macro. And here we end up coming down, sweeping this low with an SMT. SMT shows smart money accumulation. We end up also touching that 5-minute fair value gap below. And we end up running into a buy model here, touching top of that new day opening gap here, or new week opening gap. Sorry, my apologies. We end up leaving a consolidation here. And then there's not a whole lot here. There actually was a SMT here, a little small SMT, but I'm not really going to look at that because I don't really like to look at SMTs too much unless if the narrative is fully clear. Like, yeah, although we do have an SMT which could explain this, I'm not gonna put too much significance on that SMT personally. I don't like doing that. And then we end up seeking buy side, taking buy side within the final hour macro. The 350 macro end up having nice repricing these equal highs. So yeah, we had very nice price action today. Very, very nice. If you look at here, drop down. Respect this imbalance there. And yeah, we seek those equal highs. There's not really much else. I don't know if there's anything else I want to bring up in the notes. But no, definitely a good lecture. And yeah, that's all I really got.